tonight. We're slowly drifting lower as Denver spreads the wealth of cold weather to the east. So, still in the 60s here, but we've been threatened via the forecast to head lower. We are a bit warm for this time of year. We were 75 yesterday, so temperatures in the 50s are not unexpected. Would like to get some moisture out of this deal. I see Denver probably got about 6 inches of snow, but the moisture is going north of us through Nebraska, and there's no moisture south of us. They're as dry as we are, and this will keep row crop prices higher than normal. The hard red winter wheat crop has been dusted in Texas, Oklahoma, and Kansas. They put it in with inadequate moisture and pray for rain. And we had one huge rain event. We've had like 2 rain events since September, and we need a lot more. So, wow, 10 inches. That's something. That's about as every now and then, once a decade, we can get like a foot snow here in Kansas, but it drifts 2 to 3 feet when we get something like that. But 10 inches, that's a lot. So, what do we have on tap for today? One news announcement after another. And the news announcements that come after the ADP number, which is in 10 minutes, tend to keep the market in check or on hold. Bernanke's, because he's given a speech at the normal release time, the FOMC announcement will be at 12:30 Eastern Time. It should be steady as it goes. No change in interest rates, nothing. Everything. Then they'll release the comments at 2 Eastern. Then Bernanke takes the microphone at 2:15 Eastern. So once we get past the E-minis reaction to the ADP number, and the default for that's been 100K for the last 3 months, then it's on to Bernanke's speech basically at 2:15, and they're supposed to give guidelines of what they're going to do when unemployment hits certain milestones, what they're going to do with economic growth at certain milestones, what they plan on doing with inflation at certain milestones. So the market will pour over that. Out of what they're going to do at certain milestones comes probably an assessment of the likelihood of QE3. The one that's talked about is more mortgage-backed security buying from Freddie Mac and Fannie Mae. And they take their garbage off of their balance sheet, meaning that those two entities have to ask Congress for less money and put it on the Fed's balance sheet. Now, Fannie Mae and Freddie Mac have been posting large deficits quarterly, need to get refunded, and I forget if it was Freddie Mac's or Fannie Mae's latest president just resigned with a $4 million golden parachute after requesting $16 billion in recapitalization. So the way to riches, if you're connected with Congress and the rest of that, for people that work in government, is to go to Fannie Mae, Freddie Mac, get a cushy job, and when you've had enough, leave with a golden parachute. That probably will continue. So QE3 largely is anticipated to be mortgage-backed security buying. Now, the idea behind that is that they're going to help the housing market. They're going to support that and bring the housing market back. That's getting the cart before the horse. The horse is employment. And when we start putting people back to work and work through the foreclosures hanging over the market, then the housing market can get back on a path to growth. And that's probably going to take another 2, maybe 3 years, depending on what happens with unemployment. So again, you're really faced with Keynesian economics working its way through the system, delaying the inevitable, the write-offs that have always been there. If we had truly taken those TARP funds and not spread them around in crony capitalism and just bought all the bad debt that was out there, the housing market probably would have bottomed by now, and that would have been out of the way. And if you look at the two engines that usually fuel the rebound in the economy, it's the automobile industry and the housing market. And the automobile industry is coming back. They're praying for a 13 million unit year, but it peaked in like the 16 million. So we've had a low of about 10 million. We're back mid-range on that. And what do you need to do to get housing to kick in and put people back to work, in my opinion? So the guidelines that Bernanke's supposed to share with us this afternoon will get the focus. Then, after Bernanke's speech, Greece, France, Germany, the head of the European Central Bank, etc., the financial ministers are to meet in Cannes, France, and talk about Greece's proposed referendum. And whether it goes through or not, Germany has threatened them, supposedly, not to do it. Papandreou, or however you pronounce his name, has said that it needs to be done because of the unpopularity of the austerity measures. So hard for me to imagine that the Greek population, if put up for a popular referendum, would vote for this, but you never know. So then into Thursday's G20 meeting, where President Obama is going to tell Europe to get their act together and guarantee Spanish and Italian debt. And that's been the rub from day one. The Spanish and Italian debt can't be absorbed by the EU, even uncomfortably. The numbers are just too big. So this $3 trillion it takes to remove the pig's debt and all the bad debt on the bank's books, etc., and recapitalize, where does it come from? And the stick is Germany's GDP is $3 trillion plus. And they're the leader of this, and they can't afford to do it. And the Germans have said 220 billion euros is it. So you're back to what most people see as the unraveling of the EU over time, not instantly, with their southern members disconnecting from the EU, either through a euro currency too, which would be dumb if you've gone through the decoupling, in the way countries handle spending more than they produce and make is through currency devaluation. And all the countries in the pig nations are pretty good at that. So we'll see what happens. ADP in 3 minutes, 100,000, comes in greater than 110,000. Should hurt the note. Rally the E-mini, comes in less than 90. Should help the note and hurt the E-mini. And then once the market flushes that number or works that number through, it's going to be back to probably being on hold until Bernanke speaks. So where are we sellers? This could be resistance right in here, but my guess is that 8 to 12 is pretty good resistance. And on the downside, we'll have this 24 to 28 as support, and we'll probably trade in between this today. So looking to sell 7s to 11s, buying 29s to 25s, and let it come back into the middle in that 130.04 area. So we got news here in 2 minutes, and we'll see what we have. I won't freeze the screen, so we'll see what the reaction is. Okay, we had a news spike at 5:53 Eastern. It took us up to 9, and we've been drifting lower since. Looks like we're going to hit the news at 1:30 even, so 124, 129.24 to 28 is probably reasonable support. And right now it looks like 04 to 8 is probably reasonable resistance, and we'll see what the news is right here. The large 50-lot player has been on the short side until we got down a tick or two above 129.28. So basically down to the news. And we've had better than expected economic news of late until this week. So here we are at 7:15. So Challenger came in better than expected after last month's layoffs. So layoffs, 110K. That should bounce the E-mini, and it should hurt the note, and we'll see if we get follow-through selling. Now, to stabilize the job situation takes 150,000 people being put back to work, and to grow it takes over 200,000. And last month when these numbers were coming out, they said it would take, to get the economy back to where it was when the recession started, it would take 260,000 jobs being added to the economy every month through the end of 2014, and that shows you the magnitude of the jobs lost. Okay, we got up to, didn't quite make our 34.50 sell, but we did have a little bit better than expected number on the E-mini. And if you take a look at where resistance is, what did our buddies do? They got stops above London. There's your two M period highs right here in the P period. And they've brought it back down in. Getting through London, which is basically at 1235, takes us back up to this 40 to 42 area. So here's one, there's two. And then if we get above that, you've got this spill from 1253 to the last rotate up was 47. So selling against 50 if you want to limit, a resting limit sell order out there. 49.50 would be where I would put that order and then deal with it. Don't think we can get that high with what's news is on top, but you know, we are subject to whipsaws and spikes off of rumors and news announcements out of Europe, out of New York, Chicago, and DC. And it's just a fact of life. You can't trade today without taking risk into account. Otherwise, you're going to get your head handed to you. So I basically see this as resistance, 35 to 40, selling somewhere in that area. And probably best support is 15 to 20. But we've got the bottom of value at 22 in the overnight session. And we've got this high volume number from yesterday at 24. So we might actually be looking at support in this 23 to 25 area. I think I got a shot at a little deeper, but hard to say right now. So 25 would be the first band of support, then 15 to 20 would be the second. The first band of resistance would be 35 to 40. And probably 45, give or take. And then 50, give or take. So we'll see how she works out. Still think we have a shot at 34.50 to 36.50 with them getting stops above the overnight session based on the ADP news. Probably the opening of the day session before we get to that. The news is out of the way until Bernanke speaks. And we've seen higher lows all the way up. The mean green trade worked for a little. And the mean green trade is you just fade the green line. Tick inside of it, so you'd have been short right here at 27.50. And the market traded back down to, got stops below 25, so there was 8 ticks for you. Now look what happens when it goes through, and the first time it corrects, it comes back to it. And here's a mean green trade from the up down, so you'd been in at 28.50, 28.25, and so far we've made it up to 33. And so there's 8 ticks plus for you right there. It's just easy trading. It's not perfect. Right here, if you'd hit the mean green line when it was selling, you had less than 5 minutes to make up your mind if you wanted it, and you went through a severe correction, and you were definitely stressed if you rode this one out to come back and scratch. So you can't just open it up 100% of the time without a stop, but you might think of it in terms of a disaster stop as opposed to a normal 8-tick stop, where you're in at 8 ticks and it works, or you got your normal loss and you get on down the road. Good trade. Good trade for the room. Okay, we had a buy at 25 to 29. The low was 26.5, and we're back up to 130 on the note. Okay, is this the E-mini, Bill? In the note, the setback trade actually looks a lot like the it's quite often a retest failure, but by definition, a setback trade is a partial correction in an up move, or a partial correction in a down move, and obviously you're setting the direction. So right here we've got news, and you can see that when you take out this bar's high right there, that the short covering begins. Actually, that was your peak selling was over here, and people were coming out of their shorts on the way down, so there wasn't a real heavy commitment to the short side. So here's a B, you're long at 25. Here's another B at the mean green line, you're long at 27.50 or so. Maybe 27. So this first and second one are the ones that are okay to take, but after this downtrend coming into the green line, that's this trade right up in here, that close to green line, is suspect. Right here you have an RTF. You retested these lows right there. Then you've got a buy in this area, so you're long in the 28.75, 29 area. The RTF trades are better setups for us always. The outside in trades are better trades for us structurally. So if you can see this in these areas, they work better. Now, coming off, here's our M patterns, which are also producing this, and here's an RTF within a tick, within 2 ticks of this bar's high. So the setback trades can give you an RTF setup too. If the market's really moving, you're not going to get an RTF setup. You're not going to get close within 2 ticks of the previous rotation low. If it's not moving very quickly, you can get pretty close to your pivot highs and pivot lows. Okay, on the note, we had a RTF, a recommended buy 25 to 29. The low is 27.5, 26.5. In fact, 26.5. How do you take that trade and not get killed? Why, you catch a knife, right? You lean. One way to take it is to lean against this value area low right there, so you're in at 28, 28.5. The other way to take it is to buy stop in when you take that bar's high out, so you're in at 30. And we go to 01.5. So you could have made your 2 plus 30 seconds on that trade. Not the world's biggest trade, but we do whittle and chop around. And we make our money that way. And as long as this is increasing, have an opportunity to buy in our buy band again. So we'll see what happens. So we've got a good trade to start with in the note as per the call, and we haven't quite made our sell band in the E-mini. Any other questions? Bill, you can see on this screen that you're not getting RTF setups here. The market's moving. Right here, you've got a nice RTF setup on this situation right here. So just depends on this one. On the note, quite often we do get RTF setups on when the market is trending. Okay, I see there's typing going on, but not to me, so I'm going to go get my first cup of tea later.